And there it is. The markets are officially closed on this Wednesday, June 3rd. Welcome, investors and traders. I'm AJ Monte with StickyTrades, and this next half hour is going to go by very, very quickly. So make sure you take some good notes. If you can't take notes, and go back and listen to the recording. But before we get to the Nod Live feed, I just want to show you something on the Dow Jones Industrial Average ETF, ticker symbol DIA. Looking at this minute-by-minute chart, we closed right on the lows. And that last minute, you see that red candle right there? That last minute was the final push of the day to the downside. Now, I do believe Broadcom is coming out with earnings after the close, but we're going to talk about much bigger and badder things, particularly the SpaceX IPO that's coming out. So with that, let me bring on Nod from our Nod Live news feed. Nod, welcome. And before you get into all of the news that was put out on your news feed today, make sure you leave a little room there so we could open up the discussion to the SpaceX, the IPO, and some of the risk that the market is taking in a very leveraged way as they borrow money to finance long positions. Go right ahead. Take it away.
Thanks so much, AJ. Good afternoon, everybody. And again, thank you as always for taking time out of your busy day to join us either live or on recording. We're so glad you're here. Well, the bell just rang and equities did fall today as oil prices and treasury yields moved higher amid worries the U.S.-Iran conflict will escalate and keep inflation higher. Where have we heard this before? On top of this, now traders are saying the Federal Reserve is expected to hike rates this year by a quarter point or more before the end of the year, and that's not going to help the currently indebted consumer. U.S. private payrolls rose 122,000 in May, beating expectations of 117, marking the strongest monthly jobs report from ADP since January last year. The Fed put out their beige book, and they basically said that prices have increased at a moderate level across the board, with most districts reporting higher inflation. Again, something we need to keep an eye on, and something that throws cold water on cutting rates. And you talked about Elon Musk. The Wall Street Journal put out a piece saying that Elon Musk, before this IPO, is making $3.6 million per hour. So you can imagine where this is going to go after this SpaceX IPO, which aims to do a $75 billion IPO with shares priced at $135 each. So AJ, I know you wanted me to pause there and you want to talk about that because there's a little bit more to unpack, and I'm not sure everybody understands this IPO. You've been doing a great job of trying to get people exposure to it without getting shares. So where did you want to go from here?
Well, think about that number. Elon Musk is most likely going to wind up as the first ever trillionaire. Right. And you can't help but take out your calculator and think, well, what would happen if a trillionaire takes his assets and parks it into a conservative 4 or 5%? It could even be a bond, who knows? But you're now looking at $40 to $50 billion a year coming in relatively risk-free. Now, we know Elon Musk likes to take some risks, so I'm sure his returns are going to be a lot higher than parking it in some sort of a bond or a T-bill or something like that. But, there's a lot of folks that are getting caught up in the hype of the SpaceX IPO. And now one of the big questions that I've heard from people is, okay, the reports are coming out that they want to raise $75 billion, right out of the gate. But the second part of that equation is, well, if they're looking to raise $75 billion, how could the value or I guess you could say the valuation of the company be $1 to $1.75 trillion in valuation? So why don't you explain that in lay terms to our audience in case there's any kind of confusion? Because I believe there's going to be opportunity right out of the gate, but then there's going to be a sell-off. And I'll talk about why after you give the information. Then there's going to be another secondary opportunity that follows the first wave of selling. Go right ahead.
Explain. Sure. So these shares that are going to become available to us, the common people, that's only 3 to 5% of the company. So if they're going to come out at $135 a share, and if you do that math, that's where you get your 1.75 trillion. So this is $75 to $90 billion worth of stock that they're going to make available. But Elon Musk, he's being really smart. He's keeping a really tight grip on this, and he's making it very hard for people to gain more. So the wording that the Wall Street Journal used was scarcity marketing that keeps the publicly traded shares exceptionally tight to amplify demands during this IPO offering. So again, whilst we're going to see these big numbers, we're only going to get exposure to 3 to 5%. but we're going to create that giant valuation for the rest of what he holds, which could be 1.75 to 1.9 trillion dollars in value.
Now, for those who are in sales, you were taught this strategy years ago.
Yeah.
If you're good at sales, it's called a takeaway. It's when, think of it this way: you have a child sitting in front of you, or a group of children, and you bring out these beautiful red, cherry flavored lollipops, and you say, "Here you go, kids. Here you go. You want a lollipop?" And then you pull it away, and they can't have it until after dinner now. What did you just do? You created more demand for that lollipop than if you had just handed it to them. And that's exactly Elon Musk and his team are doing. They're making it harder for you to get the shares. And now all of a sudden the FOMO hits the market. How many of you heard that acronym, FOMO, fear of missing out? So what happens is there might be a secondary offering that comes out, even if it's a small amount. What do you think is going to happen after that? They're going to clamor over themselves to try to get that next wave of shares that are becoming available, which also means that Elon Musk and his team are going to be holding on to the lion's share of the valuation. And so there is major, and I'm going to call it this because it's exactly what it is, major manipulation on this IPO. Now, if you understand anything about IPOs, or even if you participated in an IPO, if you get shares of the company before it goes public, there's a lockdown window. In other words, you can't sell those shares for a certain period of time. But when that window opens up, those who got in early, many of them will look to take that profits. And the profit-taking move brought about by the selling of these initial shares will push the price down. We saw this happen with Meta. Meta actually dropped 40% in the 6 months that followed the IPO before it found the bottom. So what we're doing here at StickyTrades is we're not going right in and jumping into the super high volatility, because there will be options, by the way. And Nod, we were talking about this yesterday. Yeah. They're bending the rules to come out with an option chain within days of the public offering. And they're also bending the rules with regard to the qualification period to get a stock like this listed or part of one of the major market indices. So they're bending all these rules, and which is not a good thing for the average investor, because when you bend the rules, which are there to begin with for safety and protecting to protect these investors, you're basically going into a brand new area of risk. And so what we're going to do is we're going to more or less create spread trades that are involved in the tangent companies that will help SpaceX grow, whether it be the suppliers of electronics equipment, booster rockets, infrastructure, you name it. We're already starting to take positions there, and we're going to continue to build on those positions. So if you're interested in participating with us, you have to be a member. We're not going to give that out for free, folks. I got to tell you, but you can ask any of our members that the publications that we put out are extremely profitable. And what I'm going to do midway through this report, I'm going to actually show you one of the strategies that we put out today for our VIPs in ways to pull money from the market, so you're not digging into your own principal amount in your account and using the market's money to speculate and to profit. So what happens is, over time, the market is giving you the money on short-term spreads that eventually expire worthless. At that point, when those spreads that we're selling, again, I'll get to the details in a minute, but when those spreads expire worthless, we're left with the cash that we pulled from the market and a new position with absolutely zero risk on that position. So stay tuned. I'm going to show you that exact trade and what we did. And it's not too late to actually do it, although it's already up. Since this morning, the trade is already up 30%, but there's still a lot more into it, as I will.
Hey, speaking of Absurd Nerd was kind enough to share it. He's doing, it's not an income plan, but he's doing very well on the FCX trade. So nice job there. Copper's doing well for him. So yeah, it pays to be a member, and it's really fun to see this market action. It's creating tremendous opportunity.
Well, I want to before we get to audience questions and things,
Yeah.
I want to show you what our goal is: to help people make money. That's what we do. That's our mission. That's our I believe it's my purpose is to show people how to make money. But it's not just for the sake of making money. It's what I believe is what the money can do. And I'm going to highlight someone who did not ask for this. He might even be a little embarrassed, but I took a photo from Roby's text message that
He's
he
the
sent
best.
us. Now, Roby is one of our members, and what Roby has done is he goes and takes his profits and he sends it on over to the St. Jude Children's Hospital. And this is a photo of Roby where he takes his money, he buys these little teddy bears, and he gives them out to the nurses. The nurses give it out to the kids. And this is what Roby does with his profits from the market. So you can see how awesome this is and why we're so motivated. And Roby is just one of the many stories that we have coming from people who want to do good with the profits. Now, I'm not saying that this is what you absolutely have to do. If you have it in your heart to do it, then great, go do that. But we want people to also take care of their families, take care of their retirement plans, take care of children's educations if that's what you want to fund. And like I've been telling people all the time, there's money to be made in the market, and you could pull that money out and use it to parlay the positions into bigger, better, and much more profitable positions. So that's what we do here at Sticky Trades. And the technical charts are just so incredibly, I would say, accurate. Here, let me give you another one. I know I'm on a roll here with this, but this is a list, and I'm going to scroll through this. This is a list that was drawn up from last Wednesday's rapid fire session. Now, if you're brand new to this channel, let me tell you what we do. We take ticker symbols from the audience. I analyze them in split-second analysis using the charts in a 7-point trading checklist. And then I put target prices on those stocks. Now, in just 5 trading days, this is actual numbers here. In 5 trading days, 21 out of the 50 stocks that we analyzed in that hour have already hit. I'm going to scroll through here, and I'm going to show this again later during our rapid fire. The ones that are highlighted in green are the targets that have already hit. The ones that are in open or white, they have yet to be hit. And last week, David, who is on here from X, David, your target hit. We put NVIDIA with an upside target at 221. NVIDIA hit. So David on X gets swag from our store. David, make sure you get us a good address so we can send that over to you, and we'll do that. Now, Tafe and Mimai here are also have an open target on MU, which is beginning to pull back. So we might have some winners of some swag there as well. But if I go back one more week, this is 9 trading days, folks. 9 trading days, 76% of those targets have already hit. Again, brought to us from our audience. These are not our picks. This is what we do. And the numbers keep going up from there. So as time goes by, over a course of 60 trading days, what happens usually is we get over 80 to 82% of these targets wind up hitting. I would love to be able to take credit for that, but it's not me. It's the charts. The charts are giving us those great signals that we could trade off of, and that puts us in a high probability type of a market where you're putting your money in the best stocks that are showing where the money is going into. Now, if you want to trade the markets from the short side, you could use options and look for stocks that are where money is coming out of those stocks and looking like they're on their way down. So that's where we're coming from, and we're having an absolute blast. There's no doubt.
AJ, speaking on the way down, CrowdStrike is a crowd favorite, no pun intended, and they just posted a double beat, but the stock is down 8% after hours. CRWD.
CRWD.
That's an interesting.
Right, now look at this one. Here's after hours. Look at that stock getting slammed. Now, Nod just brought that to my attention. We'll take a look at some of the other ones that are offering earnings here. But look what happened yesterday. Let me show you what happened yesterday. This little candle right here is known as a hanging man. It's a small little body candle with a little shadow on top and a longer shadow on bottom, and it's usually found at the end of an upward leg. Now, that's part one, bearish candle. Yesterday. Also yesterday, you see this long stretch of green here? That long stretch of green is telling us that the buyers have been in control for 7 straight days in a row. But yesterday's candle following the day before has lower volume. So you may have heard me talk about volume as a leading indicator. Well, there you go. The volume was dropping on the way up. That tells us that the upside momentum is starting to wane or subside. And it doesn't surprise me at all that the stock opened on today's high and closed very close to the low. So the sellers came in, and now we're seeing after hour activity on this one absolutely getting slammed by almost $60.
And the volume is pretty big too.
And the volume is big after hours as well. So this is how we read the charts. Now, if you were long this stock, what are the charts telling you to do? Well, I don't have to give advice because the charts are telling you take your profits, or at least take half your profits, or take half your profits and put a stop below the most recent lows to protect the profits on the way up. And that's basic trading technique. Now, as I mentioned from the very beginning, these 30 minutes that we do these shows on Wednesday go very, very quickly. So what I want to do is open it up to questions from the audience. And then I also want to talk about, we're going to take two ticker symbols. Then I'm going to throw it back to Nod to talk about how leveraged this market is with regard to margin loans that are out, where people are literally buying on credit to finance long positions. So let's take 2 ticker symbols first. Not, I'll let you be the bad cop. I'll be the good cop.
I do that well. So the ticker AI, they just reported earnings as well, AJ, and that's up 11% after hours. What are you seeing now with regards to that ticker?
Well, that one doesn't surprise me because today, if you look, I'm going to go to the left as I draw it to the right. You see this high right here? You see that high? If I draw that out sideways, connect it to this high, and project out, that is a resistance area that is broken. It held resistance, it broke out, and this candle is a bullish candle. That's how it closed today. A bullish hammer. A bullish hammer is a small body candle found at the end of a downward leg that has a long shadow under the candle. So that is bouncing, or will bounce tomorrow, off of that new support level. That's number one. Number two, if you take a look at what's happening here with the stock, it's forming what looks to me like a rounding bottom. You see this? Rounding bottoms, also known as saucer bottoms, are very bullish. Now, if the stock goes up, it'll probably gap up tomorrow. But look off to the top left, right of my screen here. That resistance is around $14.11, $14.11. So it's getting very close. It's trading just under 13 right now in the after hours as you go to the minute by minute chart. See, just trading under 13. So it's going to bump its head up against that level of around 14. And then most likely you're going to see that hold as resistance, because the role reversal held as support here, bounced off a support here. Once support was broken, it reverts back to resistance. And there you go. So that's how you read the charts. Now, if anyone's long that stock after the pop here in the after hours, you got to be very protective. The charts are basically telling you, protect your profits. Don't turn a winner into a loser.
Well, speaking of turning a winner into a loser, I hopefully people didn't overstay in Broadcom, ticker AVGO. AJ, they just reported as well. Great looking numbers, but they're hitting it after hours.
All right, now let's imagine. Now we know the news that Nad just told you, but let's look at this chart for a moment as though you did not know that was happening right now. What are the charts telling you? Well, guess what, folks? There's that hanging man again yesterday. You see the hanging man? See the little red candle with the long shadow underneath? See the gap up? Oh, here's a gap, here's a gap, here's gaps down below the market. See the wide divergence from that moving average? So even before that news came out, this chart is telling us that the sellers are starting to come in. Now,
AJ, it was 6 bearish and no bullish on the 7-point checklist too.
See, and that hasn't updated yet, by the way. That won't update.
I know, but
it
supports your setup from yesterday. It's amazing.
Yeah, so we have an algorithm that Andrew Faldy built for us with thousands of lines of code, where he took the way I look at a chart and all the signals, and he threw it into thousands of lines of code, like I said, and you could put in a ticker symbol, and within 3 seconds, it's going to stack up the buy signals versus the sell signals. So imagine you had that algorithm and you're thinking, what do I do? Do I get out of this position before the news comes out, or do I hold on? Well, obviously, if you had held on, you'd be turning the winner into a loser. But if you had been listening to the algorithm, you would have been out on the close. And you would have been very happy that you got out on the close, because now you have all the buying power to get back into the stock once it starts showing buy signals, which it's not there yet, but eventually it will show buy signals. You see why we get so excited about this, because you don't have to be an expert chartist to be able to do this. The computers now are doing the work for you. All you have to learn is how to incorporate the proper strategy that involves risk management in the process. And so you look at this stock on the minute by minute basis, look at that thing. It's getting slammed. Absolutely. So the guy's low is 440 down there. So it dropped, what is that? Almost 40 points in the after hours on light volume. All right. One more ticker symbol from the audience. And then what I want to do is talk a little bit about more the leverage market that we're faced up against right now.
It's a rapid fire favorite. It's VEEV. They just reported earnings as well, and it's bouncing around.
All right. Now this one, I don't know about this one. I would be more of a buyer on a gap down on this one. Now, interestingly enough, look at this, folks. For those who are joining us on X, or maybe our first time viewer on YouTube, you see this diagonal line right here? I'll circle it. That was on my list from 10 days ago. I scrolled through that list. I don't recall who submitted that ticker symbol, but we analyzed that stock. And at the time, 2 Wednesdays ago, I put an upside target on that one. You see that? So what happened? The stock hits the upside target, gaps up a little bit, and then starts pulling back. Now, what's happening? The stock right now is down about 6, almost 7 points. I'm looking at this little box up here. It's trading 172.5 right now. So it's trading right here, right now in the after hours. Well, look where that line is. If I extend that to the left, or even go from this high to the right, look at that. This is the role reversal. See, resistance broken, will most likely turn to support. So tomorrow morning, it's most likely going to gap down to that level. And then you got to wait for a pivot, at which time, if you get the pivot, I can only tell you what I would do. If we get a pivot on this one, I would be more inclined to take a long position in the form of a diagonal calendar call spread, or maybe I'd sell put spreads to collect cash and play it that way. So that's just the more conservative way of doing it. But I would, if I were anyone looking at this one right now, I'd keep it on my watch list, watch that carefully, and any kind of pivot above that 20-period moving average would be very attractive to new buyers coming in who have the cash available to do so. All right, Nod, I'm going to throw it right back to you. You and I were talking about how leveraged this market is. It's mind-boggling again with the trillion-dollar figures that we're seeing. But
Sure.
why don't you show our audience how leveraged this market really is?
Yeah,
Now,
so I have a chart here from FINRA. So I was saying we've all heard it's different this time when it comes to a lot of things, especially the market. But whilst the markets continue to rise, so does the amount of borrowed money or margin. So this visual shows that there's $1.304 trillion that's posted from FINRA as of the start of that last month, and the number has gone up. So what that means in lay terms is that people are not using their money; they're borrowing money from their broker to expose it to the market. So I don't want to quite call that gambling, but when you're investing or utilizing money that's not yours, you call it what it is. This number is up 53% from 1 year ago today. So and it's up 7% month over month. So people are borrowing more and more money to put into the market. Again, I'll let you make up your own mind, but that kind of makes me feel like the support levels for these things are made out of jello. And if if something starts to go sideways, you never know. Right. So with this type of rotation that we have coming up with SpaceX, AJ, what does this make you think of for SpaceX and the majors, knowing we're this levered?
Well, think about margin as you buying stock on a credit card. It's not exactly the same because credit card interest is so
you're
high.
Paying a fee.
But you are borrowing money. You're literally taking a pre-approved loan out from your broker to buy stock. And when you do that, when you use that margin money, they charge you margin interest. So you are taking a loan out to do this. Now, when I was trading on the trading floor on COMEX, I use nothing but margin, because trade commodities, you have to use margin, right? It's a leveraged instrument to begin with. But since I left the trading floor, I have not used a single penny of borrowed money or margin, because I use options, which are paid cash up front. So I use the market's money to put into the market. Okay. Now, with that, because I got to watch the time, I'm going to show everyone the trade. Now, get ready to take some notes here. It started off with CRWV. Now, you see this pivot here in the stock? This stock hit my target of 123 on Monday, went a little bit higher, but then closed lower on Tuesday and continued lower today. So this area all up here from 130 to 140 is all resistance. So what I showed our members how to do is to pull money from the option markets. And what they did, and you could ask any of our members here in the chat, they went out and they sold. Now this trade isn't here anymore because it's already profitable. But what they did is they sold the 130, 135 call spread here. You see that? I'll show you what that looks like. They sold the vertical 130, 135 call spread. Now they sold that for around 90 cents. That's a high probability trade. Most likely this spread in 2 weeks is going to expire worthless, which means that you get to keep the cash that you collected when you sold that spread. When you sell an option, cash gets put into your account. That's where you get the money from the market. And then I showed them how to take that 90 cents and go buy puts in a completely different stock, which was PAYS. Now, let me show you the trade. All right. This happened, I don't know what time. Maybe you get the timestamp now. It was before noon, I believe, when this went out. And so buying puts allows you to make money on the way down. So with the money collected, again, it was 90 cents. With the money collected, the option traders took that 90 cents, and for every single one spread they sold for 90 cents, they bought 3 of these puts for 30 cents. You see that? So they bought those for 30 cents. And I was watching all the trades go by, and our members were buying it up because at the time there was absolutely no volume traded. As soon as I hit the go button, everyone started buying those puts. So look what's happening. The puts they bought for 30 cents are already 40 cents bid. So there you go. They're already up 33% on that very inexpensive option that they bought using, remember, the market's money. Now, if you're brand new to options, you're not going to know anything that I'm talking about right now. Or maybe you know a little bit about what I'm talking about. But this is why it's worth you learning options, even if it's had to do credit spreads or cash secured puts or anything like that. Learn how to trade options, because I believe the future is going to be catered to the option traders, especially as volatility goes up. Now, going back to the Elon Musk story and SpaceX, that's going to add volatility to the market. There's no question. There's still some unanswered questions about what's going to happen with the institutions. Will the institutions sell mega cap stocks in order to be able to buy more of the SpaceX IPO? We don't know. But there's a lot of talk that they may have to, that may put overall pressure on the markets to be able to finance a new position that's eventually going to be put in one of the major market ETFs or indexes, whether it be the Qs or maybe the SPX. We don't know that yet, but there will be volatility. Now, as volatility goes up, that's a beautiful thing. That's music to the option traders, because as volatility goes up, premiums get beefed up. And that's the premiums we get to sell. So as volatility goes through the roof, we get to collect more money to be able to put it back into the market and use the market's money at risk and not our own principal amount. So that's how we trade. And not, we're going to go on for another hour like this, analyzing stocks from 6 to 7. So if you want to join us on that open house, that Q&A for 1 hour, I believe there's a scan code down there. There it is, right there, right below my finger, right under my name right there. See that scan code? You go scan it with your phone, and it's not too late. You can set up a quick membership. It doesn't cost you anything. There's no credit cards needed. And then you could plug in. If you can't make it for the live session at 6 o'clock, it will be recorded. And at 7:30, you'll be able to pull it up from the member page and listen to it there. So we have all the tools for you to learn. All you have to come to us with is your interest, your enthusiasm, and your willingness to put the time in to learn. And that time that you invest is risk-free, because that is where you're going to get your dividends. The time you spend learning about how to trade options will pay off dearly over time. So that is it. Right at the bottom of the hour. I told you it would go quickly. There it is. Thank you so much. We'll see you in about an hour. We'll talk to you later. Take care, folks.